Hello, everybody. Gosh, it's an honor to be here in the room with you, especially alongside guys like Andrew and, gosh, especially Tom tonight, who you'll be seeing or listening to after. Great people, awesome traders, and terrific educators. It's just a really neat thing to be able to do something like this. Yeah, it sounds like I'm coming in a little bit light. I will try to speak up and turn things up a little bit for you. How is that? Hopefully you can all hear me. Sounds like it's coming in kind of weak. Not too good. Not too good. Let's see. How's that? Can you all hear me now? Check, check, check. Check one, check two. Check one, check two. Better? Okay. I appreciate that. Okay, well, let's go ahead and get started. As Yana mentioned, my name is Dave Osmond. I am with MetaStock. We are the longest running and oldest charting platform available in the world. We've been around longer than Microsoft. We're a very established company, and traders all over the world use MetaStock. You have a lot of trading platforms available to you here in the United States, and there's a lot of options. Worldwide, most people use MetaStock by a long shot. Here in the States, you have a lot of options, a lot of choices, and we actually partner up with a lot of those other companies and partners. There's some terrific charting software out there. What I would like to do today is show you what MetaStock has to offer, especially from some of the unique components that we've developed and designed. Really unusual stuff. Some of you may have seen or heard about this forecast cloud. It's caused quite a stir with traders because it allows you a very visual way to see prices going into the future. And it really does answer some of those initial questions that traders always have as well. This is great, I'm looking backwards in my charts, but I would really like to see what's coming up tomorrow and the next day and the next 30 days, wouldn't we all, right? We'd love to have a crystal ball that shows us the way. Well, that doesn't exist, but we think we have a really, really effective tool to help you find the highest likelihood places that prices will arrive after certain technical events. Before we start, I do need to just kind of my legal team by reading this disclaimer. I hope you'll just bear with me a moment. This demonstration is designed to instruct you on using MetaStock and accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques today should be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Okay, so let me go ahead and just share with you. We're going to dive right into MetaStock, and let's take a look at what this forecaster does. Now, you should be looking at right now just a copy of it. You can kind of see our standard view. And the forecaster, let me just explain preliminarily the concept behind this by just explaining what some of the tools are in MetaStock. Those of you who have MetaStock, whether it's this version or older versions, a lot of this will be something that you have seen before. But let me just make sure everyone's okay and understands. Charting from a standing charting point, you know, we can pretty much pull up anything like. We have access to data from all over the world. In fact, we're one of the largest data providers anywhere. We actually have access to and distribute to our customers the Thomson Reuters institutional data. And so it's the same data that banks and the hedge funds and the financial institutions are using. And they're paying roughly, you know, $1,500 to $2,000 a month for access to this data because they're on that professional level. Now, we, of course, don't charge you that much for this. Our data prices are pretty comparative to everybody else's, but we provide an institutional level of data and access and research to the tune of roughly 150 different exchanges around the world. So wherever you're coming from today, chances are we provide data for that market, whether it's stocks, futures, all the Forex pairs, pretty much everything you'd like to have access to, you'll be able to find in MetaStock. Now, our Explorer, this is our scanning utility. You would expect to see a powerful scanner in your charting. We call our system tester, and this is a very powerful back testing system. All of these things are tools that you would hope, at least, that you would find in your charting package that you have. And MetaStock does a real good job with these three things: backtesting, scanning, and charting. In fact, the scanning utility is one of my favorites ever. I've used a lot of platforms out there, and this scanner is powerful. We're not going to spend a lot of time going over that because we're going to kind of focus on the forecaster today. But it's worth it. If you haven't used MetaStock, it's worth it to give it a try. And we'll give you an opportunity to try that out today. We'll give you a link where you can get a trial of it and kind of run with it and see what it can do for you. The forecaster, though, as I mentioned, we always get this question from people, and we've been doing this a long time, as I've mentioned. But we always get this question. You know, I appreciate that I can look backwards, and that's what charts do, right? Let's take a look at it. I mean, we're looking at a chart here of the E-mini. Charts go from the right edge to the left. We're looking historically at price, and we're looking at these visual cues. And that's the whole idea and concept behind charting, is that it's a visual nature. We're looking at it, and some patterns are very, very difficult to scan for, but they're, according to the naked eye, they're a little bit easier to see. Things like, you know, here we have some tops, some support, some resistance. These things are all visual cues that we look for as traders. But the question people always ask is, well, what's going to happen tomorrow? And there are a couple of tools out there. I love that Andrew was showing off the Ichimoku, which is a very cool indicator that projects forward and gives you this zone, you know, this trading zone. And it's they call it a cloud. You know, we have kind of it's actually a very different concept in the forecast cloud, but it does project as far as 180 days into the future. So, for example, if I'm looking at the S&P E-mini like I am right now, and I see here that, you know, back on, it looks like the 16th of April, we had a cross above, and I'm pretty sure this moving average is, you know, our 50-day moving average is what we've crossed over here. And if that happened to be one of the things that I look for in my technical analysis, then this would be something I might want to do a forecast on, or any other type of technical analysis that you're running. So go to our Power Console here in MetaStock, and let's select the forecaster. And let's just go ahead and take a look at the E-mini. We'll just start up this program. Let me show you what it looks like. And actually, what it'll do is I'll usually pull this up with a couple of monitors. I can look at my chart and my forecast side by side. Can you all see the forecaster now? This is it's kind of a blue screen. Hopefully you're seeing that okay. Essentially, we're looking at two different things here. We've got, this is the actual forecast cloud. This is what we're looking at to try and find ones of highest probability. And I kind of want to go through and explain each little piece here so it makes sense to you. Right out of the gate, you're looking at this and you're thinking, this is really different. This looks really unusual from a technical analysis standpoint. This is a patent pending technology that a lot of the brokers have been really, really hot on. They've been kind of propositioning this particular tool from us. We're going to hang on to it. But this forecast cloud, we call it, is looking into the future. And let me just identify the different parts of this chart. On the left end, this axis is actually our price. And so it says 0, 2%, 4%. That zero line is what price is right now for the E-mini. And these zones of above and below are telling us in a direction of bullish or bearish. This scale over here on the bottom, 7 and 14 and 30 days into the future. So this is today on the hard left edge. Going forward into it a week, 2 weeks, a full month. We can actually set this as far as 180 days. Let's stick with 30 for now. If you look at the scale here off to the right, what we're looking at is a percentage of probability. The highest likelihood that prices will arrive in that area are going to be in this hot color zone, anything in the 60, 70, 80, 90 and above. This pinks, reds, and yellows have the highest chance that price will arrive in those zones. So if you're looking at this chart right here, in the next 7 days, is there a higher likelihood of the price going bullish or bearish? Anyone want to take a stab at that? I hope I'm looking at the chat properly. I hope so. If you're answering, you're looking at yeah, okay, I can see the chat now. This is more of a bullish move, is it not? Yeah, there's much more of this pink zone above the 0% than it is below. And you can see here that it has definitely a trend to go in that bullish direction to the tune of about 3% at about 30 days. Now, what is this based on? This is based on a certain type of technical analysis. Okay, this is not based on fundamentals or anything else like that. This is based on charting. What we've done is we've created a program that takes into account thousands and tens of thousands, heck, hundreds of thousands of data points that says that when a certain technical event has happened, what does the price typically want to do after that? And in this case, this is a candlestick pattern. We're looking at a candlestick big black pattern. Well, when did this happen? Let's look at this other tab. Right here, recently we had a candlestick big black pattern happen on June the 12th of just today. We had this just happen. We also had one happen on the 15th of May. We had one happen on April the 4th. Okay. All of these yellow indicators here are showing us when we've had that happen. Now, let's say you don't use candlestick patterns. Let's say you use something else like a moving average, cross up or cross down, or MACD. Well, you can select from this list to find all kinds of things. Well, we were looking at earlier a moving average 50 cross up. And so the most recent cross up we had was back on April the 16th. And let's see what the forecast cloud says about that. We have a very different looking cloud. It's also very bullish. You know, we're getting agreement from both the candlestick pattern average technical setup saying that, you know what, this is still looking very much on the bullish side going over the next 30 days. In fact, it's quite sure of itself in that it's got these yellow. It has a 95% chance of going to about a 1.5% increase in the next 7 days. Okay, it's actually really easy to see. These visual cues are very simple, pretty easy to translate. Once you start getting used to seeing this cloud, you can really quickly pull up a nice key indicator or key confirming signal on what you're trying to do with your charts. Now, one really important part of this is to understand that these clouds here, we keep historical record of them so that you can look back and say, well, I appreciate that I'm right now, Dave, that we have a cloud pattern that goes, you know, typically 1% in a bullish direction in 7 days. That's great. But how has this performed in the past? Well, we keep a historical record of those. In fact, if you click on these little arrows, it'll show us the actual cloud that was projected on that day. So back on April the 16th, we had this very same happen, this very same crossover, this cross above the 50 moving average. And this is what we got. This is the actual cloud that was projected on that day. And the prices we didn't have happening right there. None of these bars were there at the time, back on April the 16th. This is all we had, similar to something that we have right now. A little different because we've had more time pass. And every day, every bar that passes, it adds to the formula. It adds in and says, okay, we've learned a little bit more. We're a little bit smarter about this event. So this last time it happened, this is a pristine example, really, of how the prices actually laid right in onto the actual cloud, right into the highest percent chances. Now, if we look here, when we start kind of losing that pink zone, we're running into kind of a 50-50 area when we're out into these blues. This is a point where, you know, we say, okay, we're really out of the highest likelihood. This thing could just as well have gone down in this zone. It could have gone really anywhere at that point, but it sure stuck right through those hot cloud zones. And this would give me a ton of confidence going forward using this type of a signal or this type of a cloud. And I can look back as far as I would like. We can kind of take a good historical view and say, well, what about way back on October the 10th of last year? Well, this is really interesting here. Back then, we had it certainly in those yellow zones where it's really, really confident it stays. And then it kind of jumped out of its normal range. this is pretty fascinating here, where it comes way out. This is telling me something already, that these prices are well above the normal range right here at this point for this type of signal. And we can run through this as far back as you have data for. And we typically provide for US data and worldwide data, anywhere between 30 years to 20 years, of historical data. We're looking at 5 years right now. Looks like I've got a quick question I'll answer here. Is there a step-by-step tutorial write-up? We do have a number of recorded webinars for this, and I do have some written material that is available to you at metastock.com. If you look under support tab on that website and look under training, there is some step-by-step training on the forecaster. The bottom line is this, and I think this is the one thing that most people ask is, well, how is it projecting out these numbers? What's it doing? Let me use, I think, let's just use a few examples, your examples. Let's go ahead and do some forecasts on instruments that you're interested in, and this could be a futures contract, it could be a stock, it could be a forex pair, anything you would like to look at, and we'll go ahead and look at some of these forecast clouds with those symbols. So go ahead and throw a few symbols at me, and we'll use your examples for that. And I'll try to explain step by step, what the very what the element is that we're looking at. Okay, so we'll open up analysis, and we'll take a look at, let's look at Lulu. It's been kind of an interesting one lately. Okay, so we can actually maintain, you'll see here on the top, quite a few of these if we want. Let's take a look at this one first. All right, Lululemon right here. It looks like the most recent activity we've had is a 52-week low. And that's pretty significant from a technical analysis standpoint, isn't it? This is something that if it was in your portfolio, you got some alerts on it probably today or yesterday, or hopefully you did. Let's take a look at what some of these forecast clouds look. Well, based on a 52-week low for Lululemon, you've got this kind of cloud that has definitely a bearish picture to it. Initially, it's a bit sideways. It gets a little bump typically, and then it kind of heads itself down over the next, 3 months or so. And that's how it's essentially what it's done in the last few times that it's done this. Let's check out some of the historicals. And the last time we kind of had this happen was back in a significant degree was back on May 8th. And on May 8th, this was the cloud we got. And it said, watch out, pretty bullish on May 8th. Or I'm sorry, pretty bearish on May 8th. It's saying it's definitely going in that direction. And then it kind of jumped way out of its range right here. So today we saw this huge fall off, right? So what is this telling us? It's way out of its range. Maybe a pullback. That's something I definitely look at. When I'm looking at some of these forecast clouds, when I see bars incredibly far out of its normal range, it tells me that we're either looking at a pullback or some type of correction back into its normal range. Maybe we can expect that, maybe not. That's kind of up to your own interpretation. But let's say you're a MACD person. You use the MACD. Well, we could look at a MACD cross up, and every time we've had a MACD cross up, this is the type of cloud we have. We're getting a little bit of agreement here, and that's important. Is we see a little bump, and then it levels off again. So initial kind of bearish result, a bump, and then back into that range. So I hope you're seeing that what it's doing here. What it's doing is it's taking all of these events. It's saying all of these conglomerately over the last 5 years and saying we're going to compact this into a huge algorithm, and we're going to predict after every time, for example, every time we had this happen, on June 10th this happened, and then this particular price jump right here, everything that happened for the next 180 days is stored. And it's analyzed and it's compared using an awful lot of mathematics behind it beyond my comprehension. And it's projecting out where the highest likelihood places we ought to expect it to go. And when the price ends up above or below those highly expected areas, you typically see it pull right back. Let's take a look at a different What else do we have here? Got a few of them. IBM. Made a little money on this stock. Okay, so according to IBM, the most recent event here is this trend surge down. But let's use something a little different. CCI overbought condition. A lot of us probably use the CCI. If it's something you're familiar with the forecast cloud. For IBM, it looks like it's kind of sideways here over the next 7 days. Looks like it's going to experience a bump according to the cloud. A bump into the about a 1% increase and then kind of settle back down again at 14 days. But that's according to a CCI overbought condition. And we'll go back and kind of take a look at those and how those have panned out, over the year. But it depends on your technical analysis. And so if you're really into the CCI, you want to look at bought and oversold clouds. If you're a stochastic person, you're going to want to look at all the stochastic indicators. If you're a candlestick, follower, we've got a whole bunch of candlesticks programmed into it. Let's say you're a Bollinger Band user, and anytime we've had a Bollinger Band kind of breakout up, this is typically what the cloud has looked like. You look at right here, very interesting, weird-looking cloud where at 90 days it had a high likelihood of being in these zones here at about 45 days and 90 days. Let's take a look at this Forex pair for pound yen. Oh, hang on, let me pull that up one more time. Probably. Let's try that. Not a pair I typically trade. All right, Paul, let's see what we have. Okay, so Paul, if you want to just elaborate a little bit on some of your analysis, what type of systems and things you use, or we can just kind of pick through. But it looks like quite a few candlestick patterns have happened recently. This one. We've got the big white, big black, and a candlestick hammer. Look at this most recent one. The big black right here. And the cloud saying it's going to kind of continue to go sideways on us. It has a real equal chance of just kind of staying in that same zone, but it's definitely looking for a pullback when this happens after that first week. You see that? That zone right there is telling us about a 0.5% pullback in between the second week after that candle pattern happens, typically, is what it's saying. And let's see, most recently this did happen. We had this very same event happen on April 4th. It definitely kind of pulled back, came out of its range right there. It followed right through the cloud. That gave me a little confidence going forward in that. Yeah. That looks like a tough pair to trade. I don't trade a lot of Forex. I stick with some of the more traded instruments like the Aussie dollar and obviously the euro dollar. But it works on anything. I mean, in MetaStock, you can chart just about anything. You can do a forecast on just about everything. Let's look at some of these other symbols. See, one thing we're really conscious of in MetaStock is that, we work with a lot of educators, especially in guys that we've just heard from. We work with Andrew King. We work with Tom Busboo, who you're going to hear from later. A number of the people here. We are not trading advisors. We don't offer advisory services, but what we try to do is develop the very best tools for educators. And we kind of customize things around them. And this, I think, is a good example of some of that innovation. We are looking to really build some of the best tools available. It's always been our legacy. And this, I think, has been a really good addition to the suite of MetaStock tools. So let's take a look at this one for NOR, big trending stock. And the most recent event was the Chaikin 80 oscillator negative divergence. This happened right here. Let's take a look at the forecast cloud. Looks pretty bearish out of the gate. Looks like it typically goes bearish and then comes back, pulls back according to this particular negative divergence technical analysis. But if you're a candlestick person, it would get a little bit of agreement there. I love seeing that. When I use my forecaster, I love going towards agreement between many of the forecast clouds. And that typically depends upon the type of technical analysis you're using. Some indicators are highly related to other indicators. Now let's take a look at something we haven't seen, like a moving average XXX cross down. We don't have enough of those. Only 2 have happened in the last 5 years, so we don't have enough data to calculate that cloud, and that's why it doesn't generate a cloud for us. 50 cross down, we've had a lot of those on this stock, and it looks like the forecast is continuing to show bearish based on that. So especially if you're looking at your moving averages, which I hope you all are, moving averages are pretty key, pretty basic stuff. But this one right here tells us very simply that over the next 90 days, according to a moving average 50 cross down, this particular stock is just going to continue to fall. Gosh, this thing is projecting almost a negative 20% over the next 2.5 months. So, you know, maybe this adds confidence to the fact that your position is, hey, I'm looking to short this thing. This happened, you know, quite a bit. Let's take a look at historically, you know, what it did. And back on March the 14th, we had that same cross down of the 50 moving average. It stuck right in the cloud. Look at this. This is a really, this sometimes kind of creeps me out how accurate this is. But right here, it projected out a couple of months out that it would come into this range. And it sure got close to it. It came right down into that tiny little pink pocket. The moving averages I found to be really, really helpful in the forecaster especially, but this thing stuck right in the path we thought it would be. Now at this point, when we get out of those pink, it could do anything. We could see that it had a chance of coming up here, it had a chance coming down here. But certainly if we're still seeing things in that 60% likelihood, that tells me something, especially if let's say I'm an option trader and I've got expiring contracts coming up here. Anyone who's trading contracts like that knows that the probability cones and the things that have been developed in the past, those are pretty cool indicators. This kind of takes it to a much higher level, tells you where those puts and calls ought to be. and I'll tell you, when we first released this, the people who got the most excited were our options traders. We had quite a response to the option trading, and we never really intended for that, but it's exciting when you put out a technology that has kind of an unintended consequence to the positive side like that. But this is a good example. And then of course it happens again and again and again, and most recently it happened here, and we're getting such good agreement out of these forecasts. This is a good example of what I was mentioning earlier. Mike, when you suggested this one, I hope you were shorting it on that day. See where it popped right out of the pink zones? These prices came out, and that tells you something. It says that this price right here is all out of its normal range. And it tends to be a kind of magnetism that pulls these bars right back up into its more common range. And it does that. You can kind of feel it sucking those bars up into its higher range. Without the benefit of this cloud, it's hard to see what it's trying to do there. But when you throw that cloud on top of it, it's really very simple to see that prices want to return back into that range. And that's what they did. So this would be one particular cloud, just after doing, what, 5 minutes of research on it, that would give me a lot of confidence moving forward with it on the calls that it gives. Let's take a look at one more, IWM. Okay. IWM, also a nice looking trending instrument here. And I like the ETFs a lot. Let's see what it had to say about this as far as this candlestick pattern. It always shows us the most recent item that has come up right here. This candlestick below the stomach is the most recent thing that happened. So let's take a look at it. The forecast cloud says that it wants to continue to trend in that direction according to that particular technical analysis. Let's check some of the other candlestick patterns. Rising wind. Yeah, it also has kind of a bullish trend to it. The doji bearish. This one also has a bit of it. I'm getting good agreement from the candlestick patterns that have happened recently. And when I in and look historically, especially let's say I'm a candlestick pattern guy and I'm looking at the doji bearish, and this happened back on May 13th. You know, the prices jumped out of their normal range to the high side. And then they settled right back, kind of got sucked back into their normal range where they should be according to the cloud. So I hope what you can see from this is that it's actually a really simple tool. It's not hard to use. Step by step, Mr. Meta, as you asked, there's the step-by-step training on this will show you kind of essentially the same thing I'm showing you here, is that the process by which you want to use a tool like this is to find the technical analysis that makes sense to you, or at least this technical analysis you're using in your chart. Plot that cloud. Interpret the cloud, which says, okay, this is definitely a bullish move over this period of time, you know, and then say to yourself, well, what does it look like in the past? Has it performed well under these circumstances? Now, past performance it's not always indicative of what's going to happen in the future. We all know that. We've all used charts. We know that anything can happen. But one of the great and I think most fundamental features of this is that it shows us where it should be. You know, where those things ought to be is that's a big telling sign that on this day, for example, right here on about the 22nd, we saw the price go incredibly far out of its normal range. In fact, it's black up here, which means that almost never is the price in this range after an event like this. That tells me a lot. It tells me this thing is going to go sink back to where it needs to be. And so just from that standpoint of just trying to get a handle on where to set your stops, where to set your profit targets, this tells you a lot of what you should be able to expect there. Now, let me also put it to you this way. This is a tool that you would never use alone, I don't think. I know that there are some customers who actually do. Me personally, in my own trading, I have 4 or 5 templates and trading systems that I use that have been very good to me. It's the trading system that has created a lot of confidence in the way that I trade. And so I would continue to use that system. And then I use my forecaster to kind of confirm that position. You know, in MetaStock, let's say, you know, if I scanned my trading system and I'm looking for, you know, everything that's a MACD buy signal right now on, you know, the entire NASDAQ, I could run that scan and it'll show me the, you know, 14 or 15 maybe, that there's going to be a lot more than that in that group. But see on my watch list, they've got a watch list of 100, you know, instruments, and I run a scan on that. It says, hey, there's a buy on these 5. Well, if you're like me, I don't have an enormous amount of capital to trade. I trade kind of a limited account, I think, for most standards, but a successful one at that. But I have to make choices. I've got to make equity choices. Where am I going to put my money? You know, I've tied up a certain percentage of it. I don't allow myself to go over that percent. And if I've got a little bit to work with and I've got 5 opportunities that I just love, which one am I going to take? Well, in MetaStock, we can run them through very, very quickly, a system test for those 5 where we could take that, you know, MACD system, and I could run it on, you know, IBM and Apple and the euro dollar or whatever it is. And I can run this off of these systems, and it'll tell me which ones have performed, you know, the best over that period of time. And this particular trading system worked really, really, let me sort these by net profit, worked quite well on the euro dollar. That, you know, simulated, I decided that this system worked really, really well on the euro dollar. It was okay on Apple, and it was a real dog on IBM. That if I'd followed these trading signals on that, I would have actually been in trouble. I would have lost $778. I can do full simulations in MetaStock on multiple instruments and on multiple trading systems. And I can take that and say, you know what? Maybe the euro dollar or maybe Apple is the one I'm going to take out of these 4 or 5 things I want to do. And very, very quickly, I can then go into my forecaster, or I think it was Apple. Go into the forecaster here, and I can get a confirmation on that. Because bottom line, I don't know if I can speak for everybody here, but I trade like you. I trade very differently from probably anybody out there. We all trade very individually. But I think what it kind of comes down to is confidence in your trade. We're all going to hit losers. We're all going to lose. Nobody hits 100% of their trades. But confidence comes from winning more than you're losing. And when you've got a trading system that you're comfortable with, you've got a trading platform and tools that allows you to do your analysis very quickly. All of these things are designed for one purpose, and that's to make you more confident in your position. I don't know what I would do without my charting platform. And there are thousands and thousands of traders out there who fail miserably. The fact that you're all in here absolutely puts you in the upper group of traders because you're looking to get educated. You're looking to find an edge. I'm always blown away at how some really, really smart people out there are just really, really not smart in their trading. How many people out there who've got college educations who are just brilliant, brilliant people, doctors and lawyers, who don't spend any time doing research on the stocks that they pick. It's an interesting phenomenon psychologically. But those of you who are here today and you're looking for training and you're utilizing tools like a MetaStock, you have a much higher chance of being successful than the average trader. You have to do your homework on them. It doesn't mean you have to spend any more time than 20 minutes. That's all I spend pretty much every day. I'm more of a position trader. I trade in the evenings when I get home, and I spend about 20 minutes checking the positions that I'm in and scanning and looking for new opportunities. Or you could be a day trader, and this is what you do all day long. Regardless, it would be a disaster to just go in there going off of gut feeling and emotion. And what MetaStock and what the forecaster will do is give you the tools to tuck that emotion back into your pocket. And I don't think you can get rid of that emotion entirely, but it will allow you to take control of your trading. It'll allow you to settle in on 2 or 3 trading systems that work great for you. And once you've found that, you start becoming very successful, I believe, in trading. Are there any questions on the forecaster or on MetaStock right now? I just want to make sure I'm tackling any questions that you have that I can specifically get into on the platform. Anything that you're burning to ask about MetaStock, because we'd love to give you an opportunity to try it. And in fact, Yana, if you want to put up that link, we're going to give you a special offer here to give MetaStock a try. We have kind of 2 flavors of MetaStock. One is a real-time that is designed around our real-time intraday traders, day traders. We also have a version that's more designed around position traders. It's dealing with end-of-day data. And we'd love to give you an opportunity to try that. And click on the link. And Yana, if you can hear me there, let's go ahead and put that link up. There it is. And what this will do is if you click on this link, you can go ahead and sign up for 3 full months access of the platform for the price of just a single month. This will give you the opportunity to really run with it. The reason we do that is, well, 3 months, you should really know at that point. If you're using the MetaStock platform for the next 3 months, and if it does not absolutely grab you and say, this is what I need, no problem. It's cancelable. It's not something you have to keep. But I'll tell you this: most people who try MetaStock for that 3-month period they keep it. They can't trade without it. There's millions of MetaStock users around the world, and there's a reason why. We take care of our customers very, very well. We try to give you the very best tool set possible. So with that, I just want to kind of leave you with that special offer, and thank you, and special thank you to the Trading Pub for putting on events like this. This is one of the great educational events available to the trader out there. You're a better trader for coming to an event like this. You're going to walk away taking 1 or 2 things that will really change the way you trade. And that's going to change. That's going to pay off big for you going forward. So we're always a big fan of these type of events that really promote solid education for traders. We're all about making sure that you have everything that you need to be successful. So take us up on that 3 months for the price of 1, and we'll be happy to work with you. If you have any questions, I'm happy to answer your questions as well. I'm going to give you my personal email address. It's dave.osmond@metastock.com. All right. If you need anything at all, I'm happy to answer your personal questions on that. Just let me know. There's all kinds of custom things we can do for you as well at MetaStock. All right. Well, thanks, everybody. I sure appreciate your time. Best of luck in all of your trading, and I hope you enjoy the rest of the event. The Trade-a-thon is a great thing to have, and I hope you're getting everything you can out of it. Thanks, Yana, and thank you so much to Morgan for all you guys do for MetaStock. We appreciate it.